Hey YouTube family, it's a beautiful day in Utah. If this is your first time watching the YouTube channel, I'm Dinko the Realtor. I've been in the real estate game since 2016 and I'm about to drop game-changing knowledge, information, data, and analysis with honesty that's going to be a game changer for you. With my degree in economics from the University of Utah and as a previous analyst for one of the biggest trustees in the world, where we did stress tests and onboarded multi-million to multi-billion dollar portfolios, I don't just analyze the housing market, I analyze everything as a whole, and the information and data that we do have, I dissect it. That way you can get a better deal going into 2023 here. Now, if you haven't hit that subscribe button, smash that subscribe button. That way you're notified when new videos drop, because this insight, information, data analysis, and honesty, you're not going to get anywhere else. And I'm going to put a link in the video down below. The first video that I uploaded 9 months ago in June, where I literally laid out everything that has currently and is currently happening in the real estate market. Don't take my word for it. Watch the link down below and see why this YouTube channel is the real deal. Now, I've been providing this information to my clients since 2021. And also, do me a favor, smash that like button. That way we can grow this YouTube channel together. I'm a licensed real estate agent in Utah, and I help people just like you in the greater Salt Lake area along the entire Wasatch Front. And people are reaching out to me all the time to strategize, to put plans together to take advantage of the housing market in 2023. My contact information is down below. Call me, text me, email me. Let's get on a call. Don't wait. That way we can strategize and take advantage of this market together. Now, there's a lot going on here, and I first want to start with what's going on with the interest rates. Check this out. MortgageNewsDaily.com is showing that interest rates right now, over here to the right, are almost as high as they were in October and November. That fear mongering that builders had and that you were hearing in the news, interest rates are going down, that was only literally happening for 2 to 3 weeks, and there was small drops in the interest rate. And I'm going to show you that. I'm going to show you the amount of inventory we're going to have and what inflation is actually going to do and how it's going to help that inventory continue to hit the market. And it's also going to make builder cancellations much higher. We're going to dissect everything here and we're going to go through it really quickly. Now, back to this right here, we see that the interest rates are almost back to the 7% that they were in October and November. And also keep in mind that this interest rate is not available to everybody. It depends what kind of loan program you have, your credit score, the debt to income ratios, everything is in play. So right now you have a lot of people that are already getting 7% interest rates on the loans that they're applying for, or that they're going to be closing here if they have not locked the older interest rate. What's that going to do? Well, what did it do last time? Right here, home builders struggle to find buyers as cancellations rise. And this was right here, an article from November 8th of 2022. Well, what's going to happen now? I mean, we're heading that way, aren't we? And the 10-year, look at this. We went over this in the previous video. Right here, down to the left, is where we were at when we had those 2 to 3% interest rates on mortgages. And look where the 10-year is right now. This is that little dip after Christmas and New Year's, and where everybody was saying it's time to buy or you're going to be homeless. And I kept saying, don't buy, wait for that inventory, because look what's happening to the inventory. This right here, we went over, and we're going to keep looking at this information. A year ago, there was 1,900 homes on the market. Right now, there's 7,000. That is a 268% increase. There is almost 4 times amount of homes on the market than a year ago. And the market conditions are deteriorating. They're much worse. What does that mean? Inventory is going to keep increasing going forward, especially if we see the cancellations rise. And we know the cancellations are averaging about 25 to 30% that the builders are having. Now, those cancellations are going to be at a higher rate. And if we go back over here, we see that the withdrawals right here are 3 times almost the amount that they were a year ago. People that quit on the market. And we know that they're waiting for the spring, and a lot of those houses are going to be coming back to the market. And if we take a look, we went over this in a previous video. Look at the under contracts, astronomically lower, 37% less. And just because something's under contract, it doesn't mean it's going to close, especially if it's a new construction. Now, the revised data that came out for the CPI. So revisions show U.S. consumer prices a bit firmer than previously reported. They revised it for October, November, and December, and the data came in hotter. That's where interest rates started going up before the official CPI report even came out on Valentine's Day. And when that report came out, what happened? Right here, the CPI was up 6 0.4% from the same period in 2022. Inflation rose in January by 0.5%, following an increase of 0.1%. And in December, this was revised because it was actually negative 0.1%. So we see that inflation is not under control. What does that mean? That the Fed is going to continue increasing the Fed rate. What does that mean for the 10-year? That the 10-year is going to remain elevated. And if the 10-year drops just a little, that does not mean that the interest rates are going to be extremely affordable. If we go over here, we take a look at this, and I said we were going to go through this fast. I'm trying to provide as much information in the shortest amount of time possible. So do me a favor, smash that like button. Let's grow this YouTube channel together. Look at this right here. It goes back 2 weeks, mortgagenewsdaily.com. Right here, it was above, just barely above 6%, and we did hit about 5.9% for a couple of days. But that is still an astronomically higher interest rate than it was in the lows of 2 and 3%. Majority of America is considered unaffordable, where average income can support the average house price. And with interest rates staying elevated, that inventory that hits in the spring is going to be stagnated. It is going to sit on the market. We right now have almost 1 out of 3 houses that are on the market have been there 100+ days. On the next video, I will actually break that knowledge down, that information down, and that analysis, and also how we've actually lost 33% of the gains that we gained during the pandemic boom. That was a 2.5-year boom, and we had 8 consecutive months of price drops. And also, the first-time home buyer is not in the market right now. So those first-time homes, those entry-level homes, are not being bought at the same rate that they need to be bought. What does that mean? That can potentially mean that the median price is actually going to go up. I thought that was actually going to happen in January. It didn't. It was down 10,000 month over month. But the housing market does not just fall into a free fall. There's going to be periods where it's going to look like things are stabilizing. There's going to be maybe a period where 1 month is higher than the previous month. But we have to analyze the data of why is that happening. So could that happen here? I thought it was going to happen in January. I think it might happen in February. We'll see what the data is going to say. But the first-time home buyer, the entry-level homes are not being bought up. That also means that the sales are going to remain lower because people that need to sell their house in order to buy a bigger house, well, if there's no first-time home buyer that's buying theirs, that means they're not going to be able to buy the bigger one. So it's a circle of life in real estate, and builders are in trouble. There's a lot of pain. The price right here, if we go, the producer price index, this measures the average change over time in the selling price received by domestic producers for their output. Right here, we see that the January PPI report shows producer prices rose. The Dow closes 400 points lower as hot inflation report. When stocks go down, 10-year goes up, interest rates go up, means that the Fed has a whole lot more on their doorsteps that they're going to need to fight in order to get inflation under control. This is the data we have to follow. Don't buy right now. Wait for that spring inventory. Wait until April, May. You're going to be able to get yourself a much better deal. Timelines are different for everybody. If you're a first-time home buyer, you're going to want to be a little bit more careful. Again, my contact information is down below. Why wait? Give me a call. Let's strategize. That way you can take advantage of the housing market in 2023. And remember, I'm a real estate agent along the entire Wasatch Front, the greater Salt Lake area. And people just like you are reaching out to me where we're putting those plans together. And I specialize in this area. I have the data, and that data is going to be provided to you so you can make better decisions for yourself here in 2023. Do me a favor, smash that like button if you haven't. Hit the subscribe button, that way you're notified. Help me grow the YouTube channel. And until next time, have a great day.